Welcome back to Frontiers, where we explore the latest trends in technology, innovation, corporate sustainability, and the financing that supports them. I'm Kat Hunt, and today we have a very special episode. I'm handing the mic over to Earth Finance's CEO, Garrett Kephart, who's sitting down with Jeroen van Heiningen, founder and CEO of 123 Carbon, a global book and claim platform across all transportation modalities. It's also a global conversation. Jeroen joins us from Amsterdam, and Garrett joins from Earth Finance's headquarters in Seattle, Washington. Today, they'll be demystifying market-based mechanisms, specifically book and claim and advanced market commitments, and how these tools can finance sustainability in hard-to-abate sectors. Enjoy the conversation.
Jeroen, welcome to Frontiers. Really glad to have you. We're here today to demystify a couple of topics that relate to market-based mechanisms, concepts like book and claim, advanced market commitments, carbon insets, specifically in hard-to-abate sectors. So to just get us started, can you tell us a little bit about your career and tell us about 123 Carbon?
So I started my career at Accenture, strategy consulting in the oil and gas business, founded Accenture Sustainability Services in 2006 to move towards sustainability consulting and introduce that into the Benelux market, and actually got immediately involved into book and claim when writing the climate strategy for the Royal Dutch Airlines in aviation, where they were faced with their climate strategy. We basically said, if you want to move forward, then you need to address your sustainable aviation fuel is 99% of your footprint. There's no way you can run a sustainability program without addressing that. And that obviously led to the fact that at that time, sustainable aviation fuel was extremely expensive and not well known. And we knew that we needed new instruments to bring this to the market and to make it scalable. So that got me into book and claim in 2008, 2009 on the aviation side. After that, I was the co-founder of a company that introduced low carbon fuels into the marine space and the road market, selling renewable diesel and FAME-based products into the marine sector out of Rotterdam. We also developed a book and claim program there. We sold that company in 2019. That company has been recently acquired by Glencore. And after that, I knew that I wanted to set up an independent platform that allowed others to move into book and claim and provide a independent infrastructure for fleet operators and fuel suppliers to act on book and claim and position themselves into the market. And we decided to do that from the beginning with a multimodal approach, meaning that our platform is a fully integrated platform that was originally designed to target multiple modalities in one go. So we are one of the few that do air, road, rail, marine, and inland shipping.
Oh, that's great. I did not realize that you are a serial entrepreneur with a successful exit already. That's pretty exciting.
The thing that was bounding me is the physical connection to the molecules.
Mm-hmm.
So the exit allowed me to set up an infrastructure that allowed me to develop a global company without any big capex. So it was a blessing, basically.
That's great. So not everybody in the sustainability world and beyond understands how market mechanisms are really critical, especially in hard-to-abate sectors. Can you give us a little bit more detail about why are these kind of mechanisms so important to funding and scaling sustainability innovation?
I think you're correct in stating that book and claim is almost always linked to hard-to-abate sectors, and there's a specific reason why that is. It's not an instrument that's applicable to all markets. What we see in hard-to-abate sectors, and let me define those first, you're looking at most of the transport industry, you're looking at steel, you're looking at cement, you're looking at aluminium, you're looking at chemicals. Those are the markets that have been seen as the World Economic Forum as being hard-to-abate sectors. Now, there are a few challenges in those markets that are pretty much comparable from one market to the next. First, there is typically no silver bullet. There's no one single solution that is out there that can decarbonize that industry. So we need a multitude of solutions. Another big challenge is the distribution. There's a geographical challenge, which means that supply and demand don't always meet up. And you need, obviously, supply and demand to meet in order for a market to accelerate. And if there's a disconnect between where the molecules are and where the demand is, then you're struggling to decarbonize to make transactions happen. And the third one deals more with the financing instrument. You can imagine that if you run a steel factory and you have a furnace and you want to move into an electrical furnace, that's a big capex decision that you have to take. And that opportunity comes around once in every 30 years. So at that point, you need to have a lot of levers that are standing on green in order to make that deal happen. And book and claim can play a role in eliminating that as well. So it solves what we believe is a distributional problem by matching supply and demand globally, and it helps finance capex investments in order to make that transition happen. And I think that's where the more market-based measures play a typical role.
Can you go into a little more detail about exactly what book and claim is? And it relates to your name, 123 Carbon.
Yeah, it does. It does. I wish you could see the logo. You see a little underscore under the 1, 1, 2, 3 with the 2. But basically what we provide different pathways, of which book and claim is the most predominant one, different pathways through which a scope 1 partner, which is the one that actually emits the emissions, burns the fuel, can allocate their carbon reductions to downstream partners who can report them into their scope 3 emissions. So basically, 123 Carbon means from scope 1 to scope 3 using book and claim solutions. And that's what we specialize in.
So who else is doing book and claim? And why is your approach unique and different?
There are a lot of companies that are being forced into book and claim because there's no alternative for them in order to recover the investments that they do in low carbon initiatives. And what we see is that when this market started, let's say about 8-9 years ago, a lot of companies had their own program. They had their own book and claim, which they call in-house ledgers, their own internal book and claim systems that they use to accommodate their customers. So there are a lot of companies out there that could be fuel suppliers, but also fleet operators that already do book and claim for quite some time. Where we come in is we act as a registry, as an independent registry, which means that we support those companies in verifying their low carbon transport activities, issuing what we call environmental attribute certificates, carbon certificates, if you like, and they can allocate them to their customers using our registry. So we provide a secure environment where these EACs, these attributes, can be issued, transferred, and retired where needed. Now, I think it's important to understand that recently there was an ISO standard issued on book and claim, the ISO 22095, and that typically says that we need to have a separation between the methodology that's out there, the record keeper, which is the registry, and the assurance in order to make sure that the market has its integrity. So the methodology is also needed to be there. And the methodology for transportation was developed in 2023, even though some companies were already active prior to that, but a global standard was developed in 2023. And then obviously you need the assurance partner. So that's kind of the tripartite that you would need in order to make this happen. And we see more and more companies now moving towards those solutions now. Are there more companies doing this? Yes. Especially in the aviation space. There are about 6 or 7 global registries available for companies, each with their own different focus. In marine, it's 2 or 3 big ones. In the trucking, there are also just a handful. And I'm happy to say that we are one of very few, if not the only ones, that take a full multimodal approach, because we think that's what the Scope 3 partners need. If you are a big, fast mover consumer good in your supply chain, you have road, air, rail, and marine, and you want one single platform through which you can achieve your carbon targets. And that's what we provide.
We've seen in recent weeks, we've seen price spikes for diesel, and probably bunker fuel as well. I've not seen that marketplace because of geopolitical events. I mean, does that create demand?
It does and it doesn't. So some might say that this development could potentially put on hold at sustainability or at decarbonization. But I think it is not always about decarbonization. What it means also is that we need the energy transition to also move away from fossil sources. And I think the dependence on fossil sources has become incredibly obvious over the last few months, and the scarcity and the power that it brings. So I would assume and would think that the driver is not always about the decarbonization space, but it's also about defossilizing and ensuring that we can maintain our way of living, but we need to base those on different resources.
What are you seeing in terms of regional and market differences, North America versus Europe, Asia Pacific, et cetera?
As a platform, we operate with global methodologies. So the methodologies are identical, whether we use them in the US or in Europe or in Asia. And our platform is supported by around 150 companies that operate in 17 countries. So we are already operating at a global scale. 43 of those are publicly traded. What we see is that book and claim typically will start a little bit more from the Europe side and has got some interest in the APAC region. And we now see the US market ramping up quickly, especially on the road side. So with regard to the approach, there's not a lot of differences. There might be differences with regard if it comes to transparency and data availability, because companies are not buying the fossil molecule. they're buying a certificate, the right for decarbonization. So they want transparency with that. And they want to understand what type of fuel was used, where did it come from, what type of feedstock was used. And that data transparency, that can differ from region to region. And that means that we need local solutions and local initiatives to fill that gap and provide that data transparency. So we're leaning on, in the US, more on the GREET side to provide us with the right numbers. We use a little bit more on the GLEC in Europe. So we use different sources to make sure we've got the data accessibility. But that's probably the major challenge there is.
And one thing that you said earlier that is helpful in terms of understanding what we're talking about here is many people are familiar with renewable energy certificates. It's a form of environmental attribute certificate. And you're saying that the commodity that's traded within a registry is essentially an environmental attribute certificate for scope 1 and 3, correct?
Yes, it is. The big thing also, people sometimes compare it with an offset. The big thing is that what we deal with, even though it's a certificate, it still represents an actual decarbonization within that industry. That's where it got its validity from. It's not just you're taking the carbon reductions that you achieved on a much lower price somewhere else in a different industry. No, we're actually changing the energy mix of that specific industry. And you're paying that price, you're paying those abatement costs.
So it's not a hypothetical, in other words. It's an actual decarbonization measure. And sometimes those offsets are hypothetical impacts down the line.
I think you mentioned two things that are relevant. First of all, indeed, the certificate represents an actual and physical replacement of fossil fuels with a more sustainable alternative, whatever that is. That's a very important element that brings to the table. The other part is that it makes it also very relevant for the one that is buying this. You're paying the actual price for that decarbonization, even though you don't buy the physical fuel, you buy those rights. And that helps accelerate this market. It helps transactions, it helps supply and demand meet, and therefore it helps to accelerate hard-to-abate sectors.
So let's shift to advanced market commitments, because that would be investing in a hypothetical production or production of some sort of alternative fuel or some other intervention down the line. What is an advanced market commitment and how does that relate?
Let me give an example. Let's take the steel industry. If you're operating a furnace and you want to replace that furnace with an electrical furnace, it takes a lot of capex, and not all banks are willing to fund that transition, are willing to fund that low carbon investment because they're not really sure whether you have the ability to recover your costs. And that puts you at risk. So it means that you've got an additional hurdle to take in order to make that happen. Now, the way you can do that is by getting long-term offtake contracts, future markets that say we've got buyers for these environmental attributes. They might not buy the physical molecule, but they are willing to pay the green premium and claim those carbon reductions. And that means that that electrical furnace, that steel manufacturer can continue to produce its fuel, deliver the molecules, this low carbon steel to its direct customers and sell the attributes to other partners. And they can use those longer term contracts as collateral in order to finance their capex. So it is in areas where capex are needed to make that change happen, which is often the case in hard-to-abate sectors. They are really a strong instrument to get that financing done and make sure that the decarbonization can take place.
You started your story about advising the aviation sector, and I can see a direct correlation to sustainable aviation fuel where there's not scaled production. It's way more expensive. That CapEx limitation limits the scalability. So explain, how would that work with SAF? How would an advanced market commitment using book and claim, how might that work?
If you are operating or planning to introduce a SAF refinery, it's a big investment. This is long-term. You're probably struggling already with legal terms. You're struggling where my location needs to be. How do I size this correctly? And then comes the next big question. Who is going to buy this at a significant premium? And a lot of companies have been struggling with that. We saw a lot of SAF refineries being blocked or terminated or not make it through those final stages. What they need is long-term offtake agreement. And that can be from either an airline that says, I want to buy these physical molecules, but it can also come from a freight forwarder that says, I've got a customer that wants to get security that it has access to the environmental attributes from SAF because they have a scope 3 targets that they need to achieve and they need access to those environmental attributes. And then those contracts become critical. So even though there's a big spot market within book and claim, the forward market, the advanced market, is at least as important to make sure that we can increase production and make it happen. Because at the moment, SAF is at 0.5 to 1% of the overall market. And if we want to achieve our targets, we'll need a lot more production.
So tell us, you talked about the registry 123 Carbon. You also have a marketplace, carboninsets.com. Is that correct?
Yep, that's
Tell
correct.
us a little bit about that. And I understand you have some exciting news on the horizon with Smart Freight Week around the corner.
So Carbon Insight is basically a separate company under the same holding, because we wanted to make a distinction between the registry that only deals with the record keeping part of it and the marketplace that is more involved in the commercials. There are several pathways through which a cargo owner or a forwarder can decarbonize. They can obviously go to their direct customers, their direct suppliers. They can go to freight forwarders. They can go to demand aggregators that are out there. But you want flexibility. You want to be able to buy on the spot, and you want to be able to meet your specific purchasing criteria, specific feedstock, specific location. And Carbon Inset is a matchmaker platform that's been around for over a year. And based on the 123 Carbon platform with which it's integrated, it provides an external marketplace for spot markets. And that means that there's now transparency. There's transparency on the offers, there's transparency on the pricing, and it's a much easier way of comparing and doing business and reduce. So we're basically putting this at your fingertips to make the procurement easy and to facilitate that process. We saw that in the market, transactions took months and months, not only from the legal side, but also make sure what is it that we actually want, what type of projects do we need. With Carbon Insights, that will be launched at April 13th, ahead of Smart Freight Week, there will be a global marketplace where whatever the methodology is, whatever the modality is, whatever the fuel type is that you're looking for, whatever the geography is, there is supply, and you have readily access to that supply, and you can compare and buy and reduce through that marketplace. So we think this is an exciting new step in the market, bringing transparency to the market. And I think what's also important is that Carbon Insights is here to facilitate the market. They're not a broker. They don't take any positions. They're just showing what the offers are of the issuers on the 123 Carbon platform. And those can be fuel suppliers, those can be carriers. So you would be buying directly from them just now through a central hub. We think that's a way forward into accelerating this market.
In this conversation, we focus on hard-to-abate transportation modalities, multimodal pathways, but I can totally see how a big corporation with a vast global value chain could find value within different elements of their value chain, transportation parts of that. They're making a trade-off between a high integrity carbon credit that might create value down the line versus something that they know is actually decarbonizing, and they can book it and claim it in a very transparent way. That seems like something that should be in great demand.
If you look in the end what companies are looking for, they want to meet their targets. They've signed up to the Science Based Target Initiative. They introduced their Scope 3 targets there. They've been ambitious as to what they want to achieve in 2040 and 2050, 2030 maybe even, and they will be held accountable for that. So obviously what they're looking for is two things. It needs to be relevant. It needs to really address and lower their Scope 3 targets. It needs to be part of that target reduction. It needs to count, basically. And then the second thing is they would like it to be as cost efficient as possible. Book and claim or market-based measures are an instrument that can cover both. So it makes sure that there's always an opportunity to decarbonize. Even if your direct supplier may not have the opportunity, there will be another supplier that can bring this to the table. So there's no excuse in not meeting your targets, because the system is there and it opens you up to the global market, not just to your own supply chain.
Yeah, that's fantastic. So thank you, Jeroen, for this great conversation. Thanks for walking through all of this. Really enjoyed it.
Thank you very much, Garrett. Thanks for having me here.
And for listeners who want to hear more, we'll have links to 123 Carbon, carboninsets.com, Smart Freight Week in the show notes. If you're thinking about how to integrate book and claim and carbon insets into your decarb strategy, or how to use the instruments like environmental attribute certificates, advanced market commitments to create new financing pathways for decarbonization. That's the kind of work that we do at Earth Finance, and 123 Carbon exists to help with. So reach out. We'd love to talk.